there, it's Mike Langford. Welcome to another episode of the Modern Financial Advisor Podcast. On this episode of the show, Katie Hendricks, Vice President and Director of Asset Allocation Research at Dimensional Fund Advisors, is back for a deep dive on the firm's newly unveiled UMA platform. Now, UMA stands for Unified Managed Accounts, and they're kind of an evolutionary improvement over SMAs, or Separately Managed Accounts. Katie and I are going to be digging into all the details, but one thing really jumps out, and frankly, it's the big reason why I wanted to have Katie on the show to talk about this. It's the fact that Dimensional's UMA platform is providing access to what used to be a solution for the very wealthy, and now it's available to the mass affluent segment. This is absolutely fantastic for you and your financial advisory business and your clients. You're absolutely going to love this conversation. Now, before we get the conversation going, make sure you subscribe to the podcast on Apple Podcasts, Spotify, Google Play, Amazon, the YouTube, so wherever you like to get your podcast jam on. And if you have a question or a suggestion for a topic or a guest for the show, hit me up. I'm basically at Mike Langford everywhere on the internet, or you can shoot us an email, podcast@finservmarketing.com. Okay, let's get to the conversation with Katie Hendricks. Well, Katie Hendricks, wonderful to see you. Welcome back to the Modern Financial Advisor Podcast.
Thank you. Good to catch up again. Next time should be in person in Austin.
Yo, I was thinking the exact same thing. I'm like, I should have just pinged you and said, we should just meet and record in the studio together. It is weird because I would say better than 90% of all the podcasts we've ever recorded have been remote now, right? And then because it just started that way, it's gotten better over time because of the technology we use. We're using a solution called Riverside now, which is nice. You can see the person, record super HD quality audio and video is great, way better than the old days. But then you realize, like, every once in a while it'd be nice to see a person across the table.
Yeah. Okay, so for the next one.
For the next one, exactly. So we'll make sure we get that on there. So I'm super thrilled that Bennett reached out to us. So your man on the ground, he's listening to us. So hi, Bennett. He reached out and he says, hey, we launched something new. Would you like to have Katie back on the show? And I was like, absolutely. She's a great guest, and let's just jump into it. But the last time you were on the show, Dimensional had just launched an SMA solution designed to kind of allow financial advisors or bring in SMAs, separate managed account, to a wider range of clients, right? It's kind of democratizing this stuff. So I wonder if we could start with a recap of that solution, and then we'll kind of grow from there.
Yeah, that sounds great. So that was almost 3 years ago.
Yeah.
I remember the day that we went broad availability with that very specifically because it's the day my daughter was born.
Oh.
So I know it's in its terrible twos, if you will, that program. But we've been doing tax managed separate accounts for a long time, for over 20 years, really. And the minimums historically have been $20 million.
Yeah.
And the reason people wanted those separate accounts was really to have some personalization, some more specific choice and customized investment solutions, and also to have tax management customized for them. So then fast forward, now we're in 2021 and technology is improving, costs are coming down, and we're hearing from a lot more of our advisors and our clients that their investors are looking for these personalized experiences as well. And with the changes and evolutions in technology, we were able to make that happen. So in 2021, we launched our lower minimum SMA platform where the minimum was $500,000. So big change from 20 million down to 500,000. And that's been going great. So that lower minimum platform now has over 950 accounts, about $2.8 billion.
Wow.
And it's taken off. And it's definitely that customized experience that we hear from advisors they want.
I love that. And that was one of the things I was so happy to talk about this because that has been a trend that I personally have just been really thrilled about for our industry in period, because certain things have only ever been available to ultra high net worth individuals, right? And to suddenly give the same benefits down to a wider range of people, like heck, we saw the robo advisors come out years ago, right? Where they're, asset allocation models and so forth that were used to be very expensive, and now they come down in price, and you can DIY that type of stuff. And that made some advisors nervous, but like the fact that it was now available to a wider range of people is a net good for our society, right? And to see SMAs come down, same thing. It's really, really cool to do it. And it often takes a firm this of the scale of Dimensional to be able to make that happen, right? Because your average RIA is not going to be able to pull off all the technical wizardry necessary to do this type of stuff, right?
Yeah, exactly. And you see a lot more growth in the industry as well. And so just building that familiarity, that comfort level with advisors, and then also that demand coming from investors, because we hear advisors using it with current clients and then also using it to win business with prospective clients.
Right.
Because exactly like you're saying, you can now compete with some of these traditional firms that offer, really fancy,
Yeah.
customized solutions. Well, now that's accessible to way more people. That really helps advisors grow their business as well.
I agree. I agree. It is the type of thing because again, the benefits aren't necessarily exclusive to ultra high net worth people, right? Like other folks
Exactly.
who happen to have regular, call it mass affluent net worth, have the same type of things. They want to pay fewer taxes, or they want to manage their tax burden, or they just want to have the extra flexibility and customization in the way that their portfolio is being managed. And so, why not make it available to others?
Yeah,
Um,
exactly.
so, what have you learned in these 3 years, right? So, other than the fact that you're in terrible twos right now, your daughter is growing up and balancing that. Since the launch of the SMA solution, I'm sure you've learned a lot. You and your team are studying what's worked, what's not working. So let's dive into it. What have you learned about the SMA product and its use cases, and what are we getting better at?
Yeah, I think a few things we've learned that kind of reinforced a little bit of what we expected. So, over 90% of our accounts apply active tax management with active loss harvesting as part of that multifaceted tax managed approach. So, definitely the number one tool we see people picking up with these is that customized tax piece. So, that kind of reinforced something that we expected going in. When it comes to customization on top of the tax piece, actually about 60% of our accounts have no further customization. So it
Hmm.
really is this tax piece that seems to be the greatest driver that's pushing people to these types of solutions, as what we've seen so far. Something we've learned, I think, is that our approach, we think a lot in the industry refer to direct indexing. When we think about
Yeah.
SMAs, it's like you can own the index yourself. Well, our approach, we think, goes beyond direct indexing by saying our goal is not to match an index or minimize tracking error. Our goal is to design a robust portfolio that will outperform while also considering taxes. And what we've learned is that's really resonated with a lot of
Hmm.
people. When we started, direct indexing was definitely the language. I think we've
Yep.
moved. Now people really understand, I think, our concept a little bit more of going beyond that. But when it comes to tax, a similar thing where the industry norm has been to talk about tax loss harvesting. That's like the tool
Yeah.
people talk about when it comes to the tax management. And I know we'll spend a few minutes later on tax more specifically, but our approach is not to try and harvest the most losses. Our approach is to have the best after tax return.
Right.
And we've worked hard to kind of educate and share some materials, develop analyses around that point. And I think that that's resonated as well. So really this focus on the comprehensive,
Yeah.
holistic approach to tax, I think has been beneficial. We've seen good results over the past few years.
That's really smart. I always I like kind of the smile you had there. For those who are watching the episode of the show and not just listening, Katie smile about like not well, tax loss harvesting is important. It has its value, but that's not the actual point of investing. Is to generate losses
Right,
so you can right.
right.
What's interesting, and correct me if I'm wrong, or I have a feeling, I guess let's call it that. And you tell me if I'm off base on this, but you hinted at something that you said you people were really looking at this less for the flexibility and the customization and more for tax management. And I wonder if that by extension means these accounts o- were resonating more so with advisors who have a strong tax practice, right? That they're focused on helping their clients match. Because I don't think every advisor is. Just and maybe they are, and they all pay attention to it a little bit. But I think a lot of advisors are, hey, listen, I'm going to help you, plan for the future, yada, yada, yada. And I'm also going to help you get the best return that matches your risk tolerance and your goals and so forth. But I suspect there are some shops that are just like, we really hate taxes, or we're really good at doing this type of stuff. Are you seeing that these are practices that are much stronger in that bent on taxes?
I think, our of the 950 plus accounts, it's about 220 firms.
Yeah.
We've seen a kind of a variety of firms, some smaller,
Yeah.
some larger, with different expertise. I think it's really across the board, to be honest. I think that's part
Okay.
of the selling point of the tool. I mean, something else we've observed as well is just the relationship that we have to have with advisors to make this a successful investment solution.
Yeah.
So I think to your point as well, it's kind of having those conversations, educating advisors about the opportunities. For example, we do proactive notifications for gifting. If there's
Yeah.
a stock that maybe is about to be acquired, you're going to get a lump sum of cash. We can notify you proactively and say, maybe you want to donate this
Yeah.
before you get that huge gain hitting your account. So our solutions team is so connected to the advisors that I think a lot of that information flow hopefully is a little more accessible, even to
Yeah.
the advisors who are less focused on it.
That's a great point, and I think that's an extra added value of the solution because again, I say this almost, it feels like every episode I mention this, but like many advisors, if not most, especially those who are the average age of a financial advisor is 60. Many of them got their start when they were stockbrokers, right? So they are not tax professionals, right? Many of them are not CFPs, and so it's not that they are not good at their jobs or what they're doing. It's that their expertise is not in tax management. Their expertise is not in recognizing opportunities for gifting, as you mentioned, and having a partner firm that can basically be there to, hey, guess what? In this account, you might want to talk about these things with your client next time you chat with them because these are opportunities, right?
Yeah, exactly. And I think part of what's so wonderful about these types of solutions is that it can free up advisors' time to focus on their clients, to focus on the relationship and the wealth plan, the financial planning that they do excel at.
Yeah.
And so outsource the day-to-day management to Dimensional. Let us worry about the things that we have expertise in,
Right.
and you focus on the client. And so if you don't make it easy for advisors, then you lose that benefit. And so we really try to make
Yeah.
it as accessible for them as possible. Our service team, the average response time for inquiries is 15 minutes.
Oh, wow.
So you ask a question, we're back to you fast. Our goal is really to provide that experience so they can go focus on their clients and the things that they're experts in.
That's great. And it's so important now because I think this urge for scale, efficient scale, right? Let's say everybody wants to scale their business. Of course, everybody wants to grow and get bigger and add more assets under management. Ideally, without adding new clients. I mean, I'll take both, but I would, you know what I mean? Like you if you could be really efficient, but one way of being efficient is leveraging the expertise of other firms or the technologies of other firms. And I think our industry is getting much, much better at that now. And I think clients or advisors, are starting to increasingly favor larger firms because of some of the new, SEC regulations about doing their due diligence on vendors. It's like, yeah, you know what? It's a lot easier to do that when it's a very well-established firm than me just picking up XYZ startup that's doing this type of stuff. I've seen a few tax loss harvesting startups, and I'm like, that's gonna be challenging for you. Anyway.
Yeah. I think that's so true. And I think that's, I spend a lot of my time on our models as well.
Yeah.
And that's why you see the growth in models too. It's really to say, let's lean on someone who has expertise in
Yeah.
this, and advisors focus on what they have expertise in.
Yeah, for sure. All right, so we got to shift some gears here. Dimensional recently launched, and this is why Bennett reached out in the first place, recently launched a UMA solution. So what is the core difference for a UMA solution versus an SMA for the advisors in the audience who might not know?
I think we've actually gotten here in our conversation so naturally because what
Yeah.
we think about UMA is we think about combining the personalized, customized solution you can get in an SMA with scalability.
Mm,
And when I think of UMA, what we mean by that is going to be an account that holds multiple types of vehicles or has the ability to hold multiple types of vehicles. So you can hold an SMA a direct equity strategy. You can hold an ETF, or you can hold multiple ETFs only.
Mm-hmm.
So you can kind of mix and match. And so an advisor can develop an asset allocation that, say, has the US equity portion in an SMA, and then the ex-US equities and the fixed income in a few ETFs, put that all in the same account, set their target allocations, and then outsource the day-to-day management to Dimensional. We'll manage back to target, we'll handle cash raises, we'll handle gifting and redemptions, and the tax, of course. And so it allows advisors to offer this customized solution, but then also have this scale. And perhaps they develop a model,
Yeah.
or they use a model that Dimensional creates, and they can apply these models to multiple accounts, and then outsource that day-to-day management to us. So we think of UMA, this unified managed account, all these vehicles that can sit side by side and have them professionally managed on a day-to-day basis by an investment expert like Dimensional.
Very cool. Very cool. Now, something I read in the prep stuff that Bennett sent over for us, and it really jumped out to me, was that the UMA solution offers advisors the ability to include dimensional funds and ETFs. Great. Awesome. That's to be expected from you. But also over 1,000 non-dimensional funds and ETFs. So this feels kind of like a big deal. So what's behind this? I'm calling it DFA plus. We got Disney plus and
Yeah.
all the other pluses. So what's behind this DFA plus approach? Is because it feels like it's new for you guys.
Yeah, for sure. So when we think about the UMAs, the reason we did this now is because we hear from advisors that they like the SMA solution. They like the outsourcing of the management to Dimensional. They like the tax piece, especially. Can we support them more in this
Yeah.
way? So by allowing this more flexible asset allocation, we can help them have more operational efficiency. So we think the key benefits of the UMA are that operational efficiency, that flexible asset allocation, and of course the multifaceted tax management. So when it comes to delivering those kind of solutions, for us, we think you can deliver a lot of great solutions with one of Dimensional's SMA starting strategies, with one of our 38 ETFs, but advisors know their clients best. And so we really wanted to give them the tools, the flexibility to provide an asset allocation that works best for their client. And so we believe we can still add value in the space
Mm.
because of the way that we manage all these pieces together. We have many decades of managing multi asset allocations, complex solutions. So we think we can still deliver an important value add to them, but really turning it over to advisors to have all the tools they need to have the most flexibility to provide the solutions that their investors need.
Love it. Love it. I want to nerd out on something, and this isn't in the prep doc that I sent over, but um, it's, anytime I see some like new innovations like this type of stuff come on board, I'm always curious, like a little bit of like, how is the recipe made? Like, what's going on your team, right? Because, Dimensional is a relatively big company, right? And there's
Yeah.
hundreds of employees, if not thousands. I don't know exactly how many employees you have, doing a whole bunch of different stuff. Um, and a new solution comes out for advisors to use in their business. So I don't know. Can you take me through the process of like what's it like to develop a new solution? Like, where's the research start? Like, this might be something that's needed, and then kind of how long does it take to kind of bake something like this before you can roll it out to the world? Because I think that's kind of interesting. For again, many of your clients are relatively small firms with probably under 10 people, right? And it's neat to know, like, how does this stuff work?
Yeah, totally. I think pretty much every department at Dimensional was involved in some capacity at some point. And for us, it almost always starts with our global client group. So those folks that are out there talking to advisors, hearing what they need. And I think if you ask some of those folks, they would probably tell you they've been working on this for years, from the beginning, from before the SMA, that this is where they wanted to go. Just hearing from our advisors. I think when it comes to the research team, so I sit on the research team, when did we start in earnest
Mm.
making the wheels turn on this? Well, last year we started allowing dimensional ETFs to be held alongside SMAs. We made that possible due to some advisor requests for that. And really, there's a lot of things that go into it. So First, you just need the data. So every single day, we get tax lot level data on every single security held in the SMA. So our SMA starting strategies could have 500 plus stocks. We get tax lot level data on all of those. And now we also need tax lot level data on all of the funds held within the
Mm,
account. So just consuming that data has to be something we can do efficiently. We do it in the morning and then we have to use it an hour later. So it's a lot of information to process, and then we need to be able to hook up those ETF identifiers to our systems and say, are these liquid? Can we trade them? Is this something we recognize? So the data is a huge component of it. And then once we have the data, we need to build our processes to monitor these accounts. We monitor them daily. So, a
mm,
lot of other UMA managers will do this maybe monthly, every 31 days, often to avoid the wash sale rule. We're doing this every day. So, we're going to look at all the tax lots of the direct securities, all the tax lots of the ETFs. And now let's think about evaluating for losses. Are there losses that are worth the transaction costs?
right.
Where are we on target with our asset allocation, all these kind of considerations. So then all of that needs to happen. And then once we make those decisions on what needs to be bought and sold, we're still kind of in the research team, but now it's got to go to portfolio managers to
Mm,
actually execute some of these and send that back to the custodians and make these trades happen. So that's kind of our daily process. But
yeah.
to bring all that to life, we have to build all of those tools. And then, of course, you need our investment solutions group and our marketing team to explain what we're doing, and our legal and compliance team to make sure that we're explaining it in a just and reasonable way. So really so many hands involved.
It is pretty wild to think about it. I mean, it's the way you just described it. This is not a simple process, right? Of just like, well, just throw it in this account and there you go. We'll look at it. It's like, no, we've got to have humans, but also I'm sure, and maybe correct me if I'm wrong, you're probably starting to use some new like AI powered tools that can like surface some of these things a lot easier, more efficiently without a human being having to do every single step, right? I mean, that's we think about why was it so expensive for this to happen before, right? It probably was because it was way more manual, right? I would
Yeah.
assume. Right?
I think so. I mean, big data has always kind of been our game at Dimensional, but big data means something different today than it
Yeah,
meant 10 years ago. It's truly, enormous amounts of data that we need to process. And then, like you said, are there issues? We can't review every single thing, have a person review all of
yeah,
that. So we need to develop tools to allow us to do that in a pretty short amount of time, frankly.
yeah.
Like, you got to get this data in the morning and then use it by the time you're done with your coffee, basically. So you really need those processes in place.
It's such an interesting thing to think about how much more powerful the average financial, and I mean powerful in a good way, like what they can do for their clients, what an advisor can do for a client than they could do even just 10 years ago, right? I mean, and it's at
Yes.
every single level of the business, right? Portfolio management, being a big one, tax management, but even just like the technology for like marketing and interacting with the clients. I mentioned, at the beginning of our call that producing podcasts has come a long way, right? When we first started doing this with our remote guests, we weren't doing video because the tools didn't exist to record high quality audio and video remotely. I mean, Zoom is okay, but it's not as high
Yeah.
quality. And so we were using these other solutions, which are, great, but they were just audio only. And it's like in a few short years, it's like everybody is, we could do 4K on this bad boy if we wanted to, right?
Yeah.
So,
Yeah. It's amazing. I can give you a really tangible example. So when we had our legacy SMA business that we've been doing for decades, we had about 20 plus accounts, $1 to $1.5 billion, a handful of portfolio managers. So 20 accounts, a little over $1 billion, a few PMs. We now have a few PMs. Maybe we added a couple more. 960 accounts
yeah.
for our lower minimum platform. So you've gone from 20 to 960 additional
Wow.
with a handful of headcount raise, and that has exactly what you're describing. Technology and all these solutions has made that possible in just a few years.
That's awesome. What have you mentioned Dimensional had to do this. Dimensional had to come out, run everything through compliance. And then, of course, marketing has to be involved. Like, what are we going to talk about? How do we pitch this to advisors? What type of marketing assistance do you offer for the advisors to learn? Because I imagine some of this is relatively new. And we're not talking, again, these advisors are smart people. They're professionals. They've been serving their clients. So we're not, talking with newbies off the street. But that being said, advisors often really like marketing help. They really like some assistance on how do I pitch this or articulate things, make sure I'm doing it the right way. What are you offering for the advisors to do that?
Yeah, I think with this tool in particular too, we're really thoughtful about saying what are the benefits for advisors,
Yep.
which are clear. It's helping them build their business, make them more efficient. But we also have to focus on what are the benefits for their investors
Mm,
and giving them, the digestible language and some key points on that exactly. So, some of the things we have a brochure, we have some write-ups, but I think a lot of it is just the numbers themselves. So, our SMAs, we looked at those that were started with all cash before the beginning of 2022. So we launched at the end of 2021.
yeah.
We looked at those accounts. We said, what was their experience over the next two full calendar years, 2022, 2023? Well, 2022, we know the market was very disappointing,
Yeah.
which was a boon year for tax loss harvesting. And then in 2023, the market was very positive, which was a more challenging environment for tax loss harvesting. Well, over those 2 years, our average SMA had about 24% in harvested losses, realized losses, outperformed its benchmark by 60 basis points on average, and maintained overlap with its target at around 90%. So, like 1% tracking error you could
Hmm.
think of. So, just sharing those kind of numbers that an advisor can take to a client and say, even in a down year, of course, I can deliver realized losses. But in an up year, in kind of a net neutral market, I can still deliver realized losses. I can still help you achieve outperformance versus the benchmark and help you stay on target. And I think really providing those tools, those types of numbers to advisors to show their clients. And a lot of times, one of the biggest benefits for end clients, in addition to the tax, is just that flexibility in asset allocation.
Right.
So if we can show them different types of solutions they could potentially build. Here are some example allocations. Here's ways other advisors are using this, case study type tools.
Yeah.
I think that can be powerful as well.
That's really cool. And do you get, it's probably a dumb question, but like, do you get advisors together occasionally? Like, do you whether it's events or so forth, like, hey, let's get a bunch of you guys in the room, like together so that you can learn from each other and so that we can, answer your questions live from stage or what have you, or just, come on in. Cause that seems like a really beneficial way to get information in the hands and get all, also probably do your research, right? For like, how do we improve
Yes.
this thing?
Yeah, absolutely. So we do have slots focused on our SMAs, UMAs at most of our conferences. So that's an opportunity. But we also have study groups with different
Mm,
groups of our advisors that are set up either regionally or by something they have in common. So I'm traveling up to Chicago in 2 weeks to talk about this platform with folks who direct the financial planning at their firms, maybe 15, 20
yeah.
advisors together in a room. And this will just be one session. They'll have their whole day where they talk about various aspects of their business. But those types of environments are so powerful for us. I
Yeah.
know the advisors, I hope, get something out of it because they hear from each other. But then, exactly like what you're describing, hearing from them, the pain points or the things that have been alleviated or what question keeps coming
Yeah.
up. If everyone asks the same question, it's probably that we're not explaining it well.
Right.
So, let's pay attention to that. Those are really powerful events for us.
I love that. I love that. I'm a sucker for in-person events. It's always great to get in a room with other people who are doing some of the same things you're doing, interested in the same thing you're interested in, and learn from them. And then, of course, bringing in some experts to maybe speak or whatever. But it's when you go to a conference, right? It's not just what you're sitting in the seminar. It's that mingling, and you actually find out, like, oh yeah, this is what we're doing. Like, no kidding, that's great.
Exactly. Exactly. I'll sit in the morning, they'll have a round table, what's
Yeah,
on their mind, and then you kind of catch up over coffee. I was thinking about this more. Yeah, I think that's really where a lot of the connection comes.
fantastic. Okay, so we're reaching the towards the end here, but I would be remiss if I didn't ask about the future. I'm a big future-minded guy, and I know I have a feeling we'll be talking again in the future, having you on for other stuff. But one of the things I really do appreciate this, and I don't mean this just because, hey, Dimensional's in my hometown here of Austin, and I get to pump you guys up. One of the things that truly does fascinate me about Dimensional is that it's an innovative firm, right? And I think most advisors would agree that most asset managers really aren't all that innovative. I'm not trying to throw shade at them, but they're just more like fast follower type. If somebody else comes up with this product or this solution, yeah, we should do that too. This is a Me Tooism, if you will. But with that said, I wonder if you can give us a sneak peek into what are the things you're looking at for the future of the UMA offering and maybe something else that you think is going to be related.
Yeah, for sure. So I think the way that we're approaching the accounts now, so we just launched the UMA platform about 10 days ago now, and we have a handful of accounts that have a mix of the direct equities and the funds, none that are fund only quite yet, but I think those will start rolling in soon. And so we've already started the tax management piece of doing both of these things together. So as I mentioned, we look at the tax lots every day of every single stock, every single fund, and we make those pieces talk to each other. So I think on some other platforms, you may have a UMA provider, a tax overlay manager who looks at the ETFs and the SMA sleeve, and you have all these pieces. You may have an SMA manager who looks within the SMA. I think ours is unique in that we look across the sleeves and within the SMA. Okay. So for example, you could rebalance within the ETFs. Maybe you generate a loss. You can use that to offset a gain, rebalance within the SMA, have a net neutral event. Everything's closer to target. So this is our approach that we're applying within the UMAs and looking forward to seeing how that works for advisors. How we can communicate that, how we can showcase the results, and excited to see this get used more and more for many accounts. So that's something we have been working on that's, about to be really deployed a bit more actively. But things that we're looking to add to the platform in the future, mutual funds. That's a big one for us. So that's a high priority. We hear it from our advisors as well. I think, as you could imagine, it also has to do with when you're funding the account with legacy positions that may be highly appreciated. Right. You're seeing a lot of mutual funds there. True. And of course, mutual funds have a lot of benefits for investors as well. So mutual funds is a big one. The other is to enhance our model management capabilities. So I mentioned, an advisor could build a model and we can manage towards that allocation. Well, we want them to be able to have one-click access to the dimensional models. So you can just say, I want the dimensional core plus ETF 60/40. Boom. It populates with those funds, with those weights. And then as we rebalance that model, it gets pushed to all those accounts. So enhancing that model management capability, that's something we're working on too. The last thing that I think will come soon as well is expanding the types of accounts for which we can offer the UMA. So we'll be able to apply the UMA in most types of IRAs, hopefully by the end of the year. The SMAs can be in IRAs. The UMAs will expand there as well soon.
That's really interesting. It's really cool. I love this, a behind the scenes view of what's coming in the future. This is awesome stuff. I'm sure many of the advisors listening are going to want to follow up, learn more. What's the best way for them to do it? They just go to dimensional.com, or is there a special link for this that we can link up in the show notes?
Yeah, dimensional.com. And we have a special page on there for our UMAs. Okay. You can see some of the research. We have, a really short little video talking about it, highlighting a lot of these benefits. And you can also request more information or a demo. Okay. So any of our current clients can go to the client site and see the tool. Any prospective clients we'd love to show them a demo, just kind of walk them through the platform. We think the technology is really easy to use. You can launch and monitor your accounts. So that's a great way for someone who's wants to get a little more information.
Fantastic. This is great. And I'll make sure you're active on LinkedIn. Anywhere else people can follow you, and learn more about, you're going to be a rock star up there in Chicago. What?
Yeah.
Where else are you hanging out? Where else are you going?
Yeah, LinkedIn and the Modern Financial Advisor podcast.
I love it. Yeah, Modern Financial Advisor podcast. Bring it. All right. This has been fantastic. Thank you very much for coming on the show.
Thanks a lot, Mike. Good to talk to you.
You as well. Thank you very much for listening to and/or watching this episode of the Modern Financial Advisor podcast. It's always fantastic to have you with us. Huge props to Katie Hendricks for coming on the show and sharing the real cool stuff they're doing at Dimensional Fund Advisors by making things more accessible to more of the investing public. That's what we want, right? We want people to have more vibrant financial lives, and giving them better solutions like UMAs, great step in that direction. Okay, that's all I have for you today. As I mentioned at the top of the show, subscribe to the podcast on your favorite podcast platform and give us a like and a share. Let people know you're listening to this show. We want to expand the community, okay? All right, that's it. Be nice to each other. We'll see you next time on the Modern Financial Advisor Podcast. See ya. Bye.